Monaco 64, home of alternative economics and contrarian views. Good morning, Clive.
Hello, good morning to you, Mario. Bit of a crisis going on in London today.
Yeah, it's really seems to be picking up. The bond market is not behaving, and I think it could be just the beginning of a wider crisis worldwide because I don't think the U.S., even the U.S. Bond market looks very healthy. Uh, we're speaking today just before the jobs numbers, so things could change. But the other thing, Clive, and I know you weren't around back then, the Suez Crisis of 1956. For those of you who haven't heard of it, basically France and Britain tried to intervene in Egypt because of the something with the canal, Suez Canal, and they invaded. They started bombing Egypt, and the Americans weren't very happy, and they warned the British, if you don't stop, we're going to pull the plug, i.e., we're going to stop the financing. And I think that supposedly was a watershed a moment for the British Empire, one would argue. And but we've had in the UK and the US, there's been a good special relationship. But maybe you could elaborate as to why maybe you think that relationship might be in danger right now, and then I'll give my 2 cents as well.
Well, I mean, I don't follow politics as closely as I should, but when Keir Starmer was elected as Prime Minister, he went to see Joe Biden. And, I think obviously Elon Musk has expressed his view on that. I think he was at a recent I don't know what happened. It was an event or something, but he was invited. Elon Musk was invited to invest more money in Scotland, and he basically said something along the lines of, "I don't see why anyone would invest in Britain at the moment." So that was a bit of a snub. Obviously, it might be something to do with the politics of the situation. But we've obviously got Rachel Reeves who's gone off to cozy up to the Chinese this week, and I don't know what the Americans are thinking of her cozy up to the Chinese when she should be cozy up to the Americans, who are, after all, Great Britain's allies. What do you think she wants from the Chinese, Mario?
Oh, let me think. Maybe a little bit
Yeah,
invest,
money.
investment in gilts.
Yes,
Yeah,
I think so.
yeah. As we speak here today, Clive, I'm just going to share the screen here. Let's have a look. Yeah. So there you go. So yeah, as I said, we're speaking on Friday today. This is coming out the next day. So things could change, but here we go, Clive. The 10-year gilt yield is at almost 490. Uh, I remember earlier this week I was warning about this already, and we were around 460 or something like that. And I said 475 would be a key level. Yesterday, I think early on yesterday, we got up to almost 5%. But it's picking up again, as you can see here. The 30 year is at almost 5.5%. And the
Yeah.
15-year might sound weird to look at it, is at 521, but the average duration, Clive, of UK government debt is 14 years. So that's pretty much how, yeah, that means the cost of borrowing for the government is going to get even worse. And then the 2 year and the five, those are the rates that mortgage lenders look at or take as a reference, and that's going up to not it's not up at 5%, but I don't see it stopping. Yes, there might be some corrections because markets don't go up or down in a straight line. So, what do you think the gilt market is indicating, and what repercussions do you think it will have for the UK?
Well, Rachel Reeves raised taxes in the last budget, and they're now at the highest level in well on 20 years. And when you raise taxes, it discourages investments. And, Elon Musk's comment, I think, are symptomatic of what a lot of people are thinking. Why would I invest in the UK? So money's not coming into the UK. It means that the pound is falling. We're seeing at the same time as the pound falling, the pound's come down from 135 or thereabouts to 122, 23 now. At the same time, we've had this large rise in gilt yields. And the reason for that is the British government's having trouble with balancing its budget. Now, Rachel Reeves, and I'm not denigrating her, she's a very intelligent person. She's got a degree in economics from Cambridge University, which is a very prestigious university, well known for its very high standards. She's also a chartered accountant, and she's also passed some exams in government financing. So I think she knows what she's doing, and obviously she said that she plans to balance the budget. But the problem is that's a bit of a pipe dream for any politician, because when you live in a democratic country, every politician has his own pet agenda to spend money here, left, right, and centre. And that's exactly what's happening in the UK. So we recently heard that they have found a $20 billion pound black hole. Um, so that story of balancing the budget has gone out of the window, and they're going to have to borrow the difference. So the more you borrow, the higher the interest rate the investors want. And that's what's happening. The interest rates are going up. We're going to get a deficit in the UK. We're going to have a recession because as you raise taxes, as you raise interest rates, it slows the economy. So her plan of balancing the budget isn't going to work. So what's the plan B? It's printing money. That's what's coming. I don't know when they start printing. It's obviously they're going to have the Bank of England on side, um, but she's obviously uh, in China now with the governor of the Bank of England. I expect they're having a nice old chat about what the Bank of England's going to do to help the British government out with its funding, and that means printing money, I guess.
Yeah, I think you've been very kind to Rachel Reeves because I guess you're not here in the UK. There's been a lot of criticism of her, mainly because she modified her CV or her profile on LinkedIn, and that she said she was an economist at certain banks, Bank of Scotland and stuff, but apparently she didn't. She wasn't an economist. She was in like a junior position, and they call her here Rachel from accounts. So I'm not too sure about that, whether she's that competent. But anyway, that's my opinion. The other thing that I think is not helping the UK is, like you said, they're raising taxes. They're also, well, they're raising taxes. They're raising employers' national insurance, and they also not only put this inheritance tax on the farmers, but also on small businesses. I was reading that small businesses now they're not going to invest. For example, Clive, if you had a factory here and your son was working with you and you're going to pass it on to him after uh, after you passed on, there was an exemption and you could pass on the business. But now, even small businesses are not going to be exempt from inheritance tax. So I read a few. Some articles and people were saying in business that what's the point of investing and in the business if when I die my family is going to have to this huge tax bill and we'll probably have to sell the business and I think that's what's happening. I think Labor thought they could grow the economy by taxing the private sector and growing the public sector, which makes no sense at all.
Well, I mean, I see that. If you've got a choice of putting money into your business and growing the business or handing it to your son in cash now, well, it's pretty obvious. So he can perhaps buy a house or pay for his school fees or whatever he's going to do. It seems to make more sense to hand it to the son than invest in the business, because if you invest in the business, you're going to lose 60, but 40, is it 40% of the inheritance tax rate at the moment? So, yeah, it makes sense to get rid of the cash now rather than wait until you die.
Yeah, I think for businesses and farms, it could be 20%, but that's still a big amount. Clive, hold on a second, because there's a problem with the dog here. What's up, Rudy?
What's the dog wants to go out?
Yeah, stay here. He's been out already. Uh, anyway, be quiet. Sorry. Okay.
So yeah, so Rachel Reeves, she's off in China asking, presumably asking the Chinese to invest in Britain and buy British gilts. But from what I read, you probably saw that the Chinese bought more gold in December. In fact, it was more than double the amount they bought in November. And I tracked back over the last 2 years. 80% of the increase in the Chinese reserves over the last 2 years is due to the two things. One, the purchasing of gold, where they've taken the level from 3 to 5% of their reserves, and secondly, the rise in price of gold. So, virtually all of the increase in the reserves has come from gold, and they're still buying it. So they seem to like gold a lot better than anything else, and probably better than gilts and better than treasuries.
Yeah, I guess the Chinese could say to Rachel Reeves, "You allow us to um, extract or produce coal because we have a lot of coal apparently under the uh, surface in the UK." Or the Chinese could say, "If you allow us to uh, go for oil exploration in the North Sea, then maybe we'll buy gilts." But I don't see this government. That's the other thing that I think is a problem for Starmer. A lot of countries are moving away from this net zero climate change agenda. And not that they're just going to focus on oil exploration, but here in the UK, Clive, Ed Miliband, he's determined to stop any exploration of coal, oil, or anything that he thinks is prejudicial. But yeah, I guess, Clive, the other way you can attract people to invest in gilts is by offering a higher return, which is a problem, though, isn't it, for the government?
Well, I mean, there's two problems here, really. Firstly, the government's running a budget deficit, obviously not planned as a deficit, but it is turning out to be a deficit, and so that's got to be funded. The second problem, of course, is all this debt which they took out during the ZIRP, zero interest rate policy period, which was the last 10 or 15 years. Interest rates on that debt was in fact very, very low, 1 or 2%. That debt is now maturing, and if they're going to renew it for the same period, let's say 30 years or 5 years or 10 years, they're going to be paying well above 4%, well, double what they paid previously. So not only do they have a much expanded level of debt, but they also have to pay a much higher interest rate on that debt. So it's a double whammy, and that does mean that it's going to be very difficult to fund the national debt out of taxpayers' money, and that's why I'm pretty sure there's no other alternative than to go to the printing press. Britain is not going to default; they can't default, so the printing press will be the answer, and that will probably come. I'm expecting in Britain probably in the next 6 months. In the United States, they're in the same sort of situation. I think in the next 9 months, we'll see the Federal Reserve resorting to buying more US treasuries because the United States has got the same kind of problem with a rising budget deficit, a rising level of debt, and having to refresh all this maturing debt at much higher rates than ever before.
Yeah, I'm just trying to find here a story. Um, there was I think the deputy governor of the Bank of England, her name is Bradine or something. She said yesterday that she expects to keep cutting rates this year. So this and that she's not concerned about bond yields rising. But I'm going to show you a chart here, uh, Clive and the viewers. This is from yesterday, so it's probably not adjusted. The rates might be a little different, but it's more the long term. If you look here, this is the 10-year gilt yield since the early 80s. Yes, I think, Clive, a lot of people like still in the City of London, the analysts, the economists, and the people at the OBR, which is the Office for Budget Responsibility. This is who Rachel Reeves depends on for the forecasts. It's supposed to be an independent agency. They are all like pricing in yields to go back to the same kind of levels that we were seeing, let's say from
Yep.
2010 to
You know, the
2002.
United States is doing exactly the same thing. If you look at the Congressional Budget Office's projections, which are pretty dire for the level of debt, they're, that's based on an interest rate of like three and a quarter, 3.5%, which, given we're already 1.25% above that, it's not going to get there.
No, and I mean, I look at fundamental analysis, of course. That's what we're talking about, all the debt and government spending, taxation. But I also look at technical analysis. And to me, Clive, this looks very clear that this period here of 40 years of easy money and rising values of financial assets is over. And like this is pretty serious here, and it's something that Rachel Reeves and her deputy, who yesterday he was in Parliament trying to calm the markets down, and other MPs, and he's got no clue. He said, "Oh, there's no problem with the gilt market. Everything's fine." And I saw his background, Clive. He's not even 40 years old, and he never worked in finance. He was like a lawyer and for a few years, and then a politician. I'm sure he doesn't have someone telling him this is looking really bad here. We could see rates at 7% in the next year.
Well, rates are already the highest this century, if we're talking about the 30-year yield. And
Yeah.
I think if I look at your chart, it looks like it's probably the same on the 10-year yield there.
Not quite yet, because we were here back in 2008. But I'll bring up a chart of the, let's see, the 30 year. We can look at it. Yeah, I think it's the highest since
The 30 the
1998.
30-year yield is the highest since well, it's the highest this century.
Yeah, and since 1998, to be exact. Let's do the weekly one. Uh, Here you go. So there you go. We squeeze it like that. So yeah, 1998. So yeah, and it doesn't look like it's gonna stop. The only way it can stop, Clive, is the Bank of England reverses QT. They're still doing some QT, which is the reverse of money printing, and then they start printing, and then they
Yeah,
start
they buy
buying.
gilts.
But
I
then
mean,
the price of gold in pounds will probably go to 4,000 very quickly.
well, your UK investors, and I know, Mario, for years you've been advocating purchase of gold, must be very happy because I see today that the gold price in British pounds hit an all-time record.
Yeah, here we are. The previous record was, let's move this here. Previous record was last November. We reached 2167. Today, the high was 2183. Right now, as I speak here, as you can see on the chart, is 2178. And it looks like it's breaking out as well, Clive,
That's right.
which is not good. This is just going to mean they'll be maybe be able to save the gilt market and keep the government going and save the defined benefit pensions and everything else. But what they're going to do is make the cost of living crisis even worse. Is that how you see it too?
Well, of course, mortgages are going to go up. Anyone who's taking out a mortgage or renewing their mortgage, the interest rate is going to shock them. So there's an awful lot of people be seeing their 5 or 8 year, 10-year, or 6 year mortgage coming to maturity, and those it doesn't matter what maturity you had, the interest rate is going to be higher than it was, and in some cases severely higher. So that's going to eat into people's cost of living. I'm really sorry for them, but I don't know what to suggest other than you got to find a way of saving more money, spend less if you can, because funding the mortgage is going to be more difficult for lots of families. And what's also interesting here, Mario, gold price in sterling, record price, yet interest rates are on long-term interest rates are on the rise steeply. Now, isn't that back to front? Because normally interest rates or high interest rates are the enemy of the gold price. So what's this telling us? It's telling us that the investors in gold don't actually care how high the interest is. They literally would rather trust gold with a 0% yield than a government bond with a 4.5 or 5.5% yield. Highest yield this century, as I said, and yet the gold price is also at the highest price this century in the UK.
Yeah, I mean, I think the same thing happened in the 70s. Interest rates went from like around 5% in the early 70s all the way up to 15% in 1981. And gold went from 35 to, yeah, 800, almost $900. Yeah, I think it's very telling that the gold price is going up as interest yields go up. It just goes to show that investors have very little confidence in the management of the pound and the gilt market. And Clive, this is the 10-year U.S. yield. Yes, we haven't made a new high, but I think it's the same kind of setup as the UK one, and I don't see any difference. And I saw, I don't know if you saw the other day, Donald Trump called for said interest rates are too high, and so he wants lower rates. So it looks like the Americans, they want a weaker dollar too.
I don't know what Trump thinks about whether the dollar should go higher or lower, but certainly lower interest rates would suit him very nicely because I'm quite sure that with all his business interests, he's got lots and lots of borrowings. And I think he'll probably apply the kind of pressure that needs to be applied to the central bank to say, can you lower the Fed funds rate? But obviously, the Federal Reserve um, can only put a cap on the bond interest rate if they start buying bonds. I They would buy them from the primary dealers who buy them from the government, and that would cap the yield so it wouldn't go any higher. But when that happens, it means that the Federal Reserve or the Bank of England is doing the same thing. They have to find the money to buy those bonds. And the only place they can get the money from is printing. So that's what we have when we call it QE, quantitative easing. They basically buy a bunch of bonds with newly printed money. The balance sheet of the central bank expands or gets bigger and bigger. And of course, that all that money is coming into the market. It's short-term money because it's M2 or M1. It's coming into the market, and then that will feed its way through to higher prices and everything, especially things like wages.
Yeah, and when do you think they will reverse and start doing QE?
In the United States, well, there's a lot of commentators who think, and serious commentators who think it will come in the first or second quarter. I don't think we're quite at that sort of level of emergency yet. So I'm putting the QE in the third quarter. I think the crisis level for the United States lies somewhere where we have a 10-year yield somewhere between 5% and 6%. We're not at 5% yet. We've got a little way to go, but I think we're on the way to 5%. So once we get to 5%, I think there'll be a lot more pressure coming from the government, the Treasury, to the Federal Reserve to say, why don't you help us out? And of course, the higher the yield goes, the higher that pressure is going to get.
Yeah, and Clive, you were speaking earlier saying that if you have trouble with your mortgage, if rates are going to be risen when you renew, that you just need to work harder, save more, spend
If you
less.
can, yeah, yes.
You can, yeah, and that's why I've been telling people a lot since I started my channel, get out of debt. And that was at a time even when rates were zero or even negative. Do you remember in 2019, 17 trillion of government bonds were negative? But now rates are going up very quickly, very sharply. It's the old adage, Clive, but let's look at it in reverse. Bond prices were in the bond market for 40 years, going up an escalator, and now they're falling down the elevator or lift shaft. So you just reverse that, of course, because its yields going up. But I see that happening. But the other thing, Clive, I wanted to ask you, um, maybe we could talk a little bit about because the some of the viewers in the UK might be asking, how do I buy gold? I'll start here first. I would look for the do your homework, for example, in terms of shopping around for the best deals or best reputable dealer, even though some of you have never bought, you would know who the most reputable dealer is. But I have someone that I affiliated with, Gold Investments. I've been dealing with them since like 2002, and it's a family-run business. So if you want to find out more how to buy gold and silver, you can contact them. There's some details below in the description. But Clive, one important thing for UK viewers and investors that want to maybe buy a little bit of gold. And the guys at Gold Investments, they say that gold is just like a bit of an insurance. So you want to have some on the side. Doesn't mean you have to put all your money in it if you're not comfortable. But one thing I would say, Clive, is that you need to get coins of the realm. So coins of the realm are basically just coins that have the king on it or the queen, and they're minted here in the UK. And they can be old coins as well. Here we've got Edward the Seventh. It doesn't matter. And why coins of the realm? Well, because they don't incur capital gains tax. So let's say you buy 10,000 pounds worth of gold, and the next year it goes to 20,000. It's worth 20,000, and you want to convert it back to fiat currency, you'd have a $10,000 pound profit, but you wouldn't have to declare capital gains tax. And it's mainly because it's considered legal tender. So, anything else to add, Clive?
Yeah, so if I mean people who are buying coins must remember that they trade at a premium to the underlying gold price. That's quite normal. So you might in the UK expect to pay 70 or 80 pounds above the gold price for your gold coins. And the same thing in the United States, perhaps it's $100 over the gold price when you buy a gold coin. The reason for that is there's a lot of extra work which goes into making the coin, distributing it, marketing it, and of course the gold dealers have to pay their rent and so forth. So you will pay a premium, but it's a very small premium over the gold price if you're buying it for the purposes of insurance for protection. It's kind of your parachute, but you shouldn't really be buying gold today thinking that you can sell it tomorrow because the gold price went up $10 because as I said there's this big or there's a spread between the buy and ask spreads. The way I look at gold, I look at it more as a sort of family heirloom or an insurance policy. If the worst comes to the worst, it'll come in extremely useful, but it's not something where if I'm thinking that, oh, the gold price is about to go up next week, I'm not going to rush down to the coin dealer and buy some coins, thinking I'll sell them back to him next week, because next week, even if the price goes up a few bucks, he's probably going to pay me back less than I paid. Then I would be using contracts for difference or buying it through my bank where you can buy electronic gold. Of course, this is not the same. I mean, people have to understand if you own gold in an ETF, an exchange traded fund, or if you own gold shares, or if you own an account in gold, I know some of your affiliates have got gold accounts. This, even though you can theoretically get delivery of your underlying gold, it's not the same as having it where you can lay your hands on it. Because if the push comes to the shove, you might find that there's difficulties getting it because everybody else is trying to do the same thing at the same time. It's like the old toilet roll principle. You remember in Britain, I don't know if it happens in America, but every time there's some sort of crisis, people rush down to the supermarkets and buy toilet rolls for some weird reason. I know when I was a child, there was a problem with sugar for some reason. Literally every person went down to the supermarket to try and buy all the sugar. I remember my mother coming back very proud. She managed to buy a pound of sugar, but the shelves, were literally emptied because people fear they wouldn't be able to get their hands on things. And the same goes with gold. So if we get into a situation where there's a currency crisis and people are starting to worry, they will rush for gold and silver. And you know you. And then you want to get your gold out of the whoever's holding it for you. Well, sorry, there's a queue in front of you. You might not be able to get it that day. And
Yeah.
a good example of that was during the global financial crisis. I was working in a private bank at the time, and we had clients who were literally buying gold from us. So when I say buying from us, these are physical gold bars of a kilo each, 50,000, maybe, well, it was probably a lot less than, maybe it was 20 or 40,000 per bar. But they would, as they started to see the banks failing one after the other, they thought the only way I can protect my money is to have physical gold bars held in custody by the bank. That's a lot. That's a lot more efficient, especially if you're buying kilo bars. You have almost no spread. It's about 1% between buy and sell prices. So they were ringing us up saying, "Buy me gold bars." And the way we would do that, we would ring the bullion dealers. So we'd have our counter agent was typically somebody like UBS who would be dealing with the gold smelters, the Argors of this world, the companies in Switzerland which melt down the gold and make the gold bars. The trouble was everybody in the world was doing exactly the same thing. So when our clients said, "Buy me gold," we could buy it, but we had to inform them that instead of the overnight delivery that they were accustomed to, the gold smelters were now saying, "Fine, but you have to wait 2 weeks because all our trucks are out delivering gold to all the banks left, right, and centre, and it'll take 2 weeks to get it to you. And of course, we've got a backlog of orders to smelt down gold, so you can't have it today." And of course, that was a big worry because people were worried if the banks went bust in that intervening 2 week period, you'd have lost your money because you'd have only had a claim on gold which isn't yet in custody. Once it was delivered and in custody, it then belonged to the client, even though it was off the balance sheet of the bank. But until it's delivered, it's still on the balance sheet as a liability.
Yeah, and I would add this Clive is not talking about things here in the UK. He's talking about it in Switzerland. He worked for a private bank. So I would add that here in the UK, you can't really trust any bank to hold your gold. So what do you do in that situation if you're planning to buy a lot of gold? Well, Gold Investments provides a private vaulting service, and it's all insured. And you can go there and look at your coins and touch them. And well, you can go and buy the coins, and then uh, they'll take it to the vaults. But yeah, so that's what I would say about the UK. Yeah, I wouldn't really keep it in the banks. In Switzerland, it's different, I would say. It's safer. But like Clive said, I remember during the financial crisis, gold dropped from $1,000 to like 700. I think it was September 2008, and you still couldn't get anything, and the premium was like 10%, Clive. And I just checked the premium here for the 1 ounce Britannia, and it's for this amount here, 11 to 19 coins, it's 3.5%. But if you look below in the description of my videos, you will get 0.5% off that premium if you tell them it's you've been referred to by Monaco 64. Uh, and the sovereign,
That coin you're showing, the Britannia, the
yeah.
2025, it's a very beautiful coin. And if you look at the bottom left-hand corner, you see that little circle. That's a kind of hologram. It's not quite a hologram, but it's a bit like a hologram. When you tilt the coin in different directions, the picture inside that little circle changes. I think it changes from I don't know whether it changes from a padlock to a dragon or a unicorn or something like that, or a trident. But if you tilt it left and right, the little picture, which you can't see on the photograph you've got there, will change. And that's an anti-forgery thing. So depending on which angle you look at the coin, you'll see a different picture in that little circle. Very hard almost impossible for a forger to make that.
So the sovereigns, they're just like they're gold as well, but they're about just under a quarter of an ounce. They're like 23.54% of an ounce. So you need to do the calculation to see how much they're charging you over the spot. And they they're also doing half sovereigns these days, Clive, and I even think they're doing quarter sovereigns. And I try to not go for the foreign coins if you are in the UK because the capital gains tax threshold is very low now. I think it's only about £3,000. So you really want to go for the coins of the realm. Yeah, Clive, what else do you think people should be doing right now? Not just in the UK, but
Well,
the US and elsewhere.
you talk about holding gold and in a bank and so forth, and it's not so. I think you know that a year or two ago, Poland decided to repatriate about 100 tons of its gold into Poland, and I read this week that some minister from Poland has been to London to inspect and count the gold bars that they're still holding in London. So, I think that was quite interesting. That are they trusting that the gold is really there? They sent someone along with a notebook, a pen, and some little yellow stickers to say this belongs to Poland on each gold bar. But anyway, that's what they were doing.
Yeah, I'm not sure the Bank of England has independent audits. I think a few years ago, someone in the Australian Senate or government or Parliament asked that the 80 tons that Australia has be audited at the Bank of England, and I'm not sure they did an independent audit. And the Reserve Bank of Australia still keeps their gold there. And I think one of the reasons why they keep their gold there is because the central bankers, yeah, they like gold because they keep it as a reserve, but they don't want the public in it. They want the public to use their fiat currency. So what the Bank of England does, and it's the leader in this because London has been the center of bullion banking for over 100 years. They use that gold to lease it out to the bullion bank so they can keep controlling the price. That's my theory. What do you think,
Yeah,
Life?
yeah, I think that's going on. Um, the bullion banks then lend it to the gold miners uh, on the basis, why don't you borrow some gold? Because we've got all this gold in the ground and you can dig it up and pay us back in 10 years. And that's all fine unless the gold price rises too much, in which case there'll be a margin call on the miners. But
Yeah.
the ultimate borrowers of gold will be miners who basically say, I'd rather borrow gold than money because the interest rate on gold is much lower than it is on borrowing dollars. And when I dig the gold out of the ground, I can repay my loan and I'll have something left over as a profit.
And I don't think it's just the miners they're lending the gold to. I think a lot of times they lend they're lending the gold to the bullion banks and the like a BIS just to keep a short position and to keep the price under control if they can. But I think now that's kind of ending because we're seeing so many central banks like outside the West buying so much gold, like you spoke earlier about the People's Bank of China. And when these central banks buy gold, they're not buying futures or ETFs, they're buying the real thing.
So it's not just China buying gold. Obviously some central banks are taking their lead from China, but we've got Poland bought quite a lot last year. Had Turkey, we had India, or all were top amongst with along with China, top buyers of gold as central banks last year. Now China did have a long rest. I think it was from something like April through to November when they didn't buy any gold. But the fact they've now resumed and are resuming in earnest, I think is sending a strong signal to central banks around the world. If you want to get some gold, you better move fast because if you don't move fast, China will have bought it at a lower price than you could have bought it.
Yeah, and I think, Clive, some analysts have said that the People's Bank of China was actually buying it on the quiet, that they were actually buying quite a lot, like in September and October. like 60 tons each month or thereabouts. And they were working that this analyst, Jan Neuenhuis, he was working that out via the customs data from China and the UK. But let's finish here, Clive. So even the mainstream media now is realizing that Keir Starmer is really isolated in the world stage. So I'm gonna put you on the spot and ask you, how long do you think the Starmer government is gonna last? Or will they succeed in serving up until, I think, 2029?
Well, interest rates on the gilts are higher than they were in the crisis of 2022. Remember, we had the gilts crisis in 22, and it caused the loss. What was the name of that lady? Liz
Liz
Truss.
Truss.
Yeah, that she was kicked out, as was the Chancellor of the Exchequer. What was his name?
Quasi Quart.
Kwasi Kwarteng, yes, he was kicked out. So we're now in crisis territory because the interest rates are higher than it was then. It could happen without much warning. We don't have a crisis yet, but all the signs are there that it's brewing. So who knows? Maybe we'll have a bit of trouble next week. I don't think. I don't think it's quite that quick. But will they last 5 years? No.
Yeah, I agree with you. Okay, Clive, that's great. I hope you enjoy your weekend, and I'll talk to you soon.
Cheers. Thanks, Mario. Have a nice weekend, and thumbs up to all your readers and listeners and viewers.
Yes, have a great weekend, guys. Take care.
Cheers. Bye bye now.
Bye.